Hmm. Assalamu alaikum students. So today we have a paper. It is May June 2022, paper 2, variant 2, and question number 5. And let's start to do this. And Bismillahirrahmanirrahim. So we have a question related to company accounts. Okay, so we have a trial balance at first. So the trial balance of M Limited at 30 November 2021 goes as follows. M Limited trial balance at 30 November 2021. Okay, so this is our financial year. Revenue is this, the opening inventory. This is called opening inventory because you can see the date 1st December 2020. So it is the previous year's closing inventory. So that is why for this year it has become your opening inventory. So this is your opening inventory. I think we should see the question paper first, so we can better analyze the paper, the question. So first of all, I think we should just go through the questions. Okay, so the question is the requirement is the part A, prepare the income statement for M Limited for year ended this. So first of all, we have to make an income statement for M Limited company. Okay, so this is very normal income statement, and you have been practicing this income statement since like for so long. So that is why it is very easy for you to understand the income statement and how it works. And the second requirement is the part B, prepare the statement of changes in equity, like sushi. We can say that in short form, this is sushi. So like we have to make statement of changes in equity, and after that calculate the liquid ratio for AM Limited. Okay, so we know that what the formula we have been using for like finding the liquid ratio. So it is very simple. You just need to divide current assets, current liability. Okay. Just remember one thing, that because this is liquid ratio, so that is why you don't need to add closing inventory in this, because closing inventory is very, you can say that, difficult to change or convert into cash. So this is a liquid asset trust ratio. So we just add those type of assets in this, which is you can say that really quick to convert in cash. So that is why we just deduct closing inventory from the current assets. Okay, so in this current assets, we supposed to add trade receivables plus your cash or bank, cash at hand and bank, and we divide it to the current liabilities. And the current liability, you already know that it is trade payables or any kind of other liability, which is short-term liability. It cannot be a long-term liability like the loan maybe you have taken from any bank, so you cannot add that type of liability in current liabilities. So the liability which is the we can say that shorter or which is less than 1 year, the amount you have to pay the loan or anything which is you can say that liable on you, any kind of amount, it should be less than 1 year, so it come under the current liabilities. Okay, so there is trade payables or other liabilities. Okay, so after that we have one more part remaining, D part, in which they require an advice from us, advise MLA whether to fund the purchase of equipment by issuing further ordinary shares or by requesting a bank overdraft. So this is kind of you can say that sources of finance, and you have already studied about this in your business book also. This is basically, you will find this topic in section 5, number 5, sources of finance in the O levels business book. Okay, so we have these questions. So now we are going to read this again. Okay, so we have purchases, rent and rates, it is our expense. This is also expense. Wages, expense. Equipment at cost, it is not our expense basically. Equipment at cost, it is our current asset. Sorry, non-current asset. This is our non-current asset. Okay, so we can use this, or it doesn't mean that if they didn't give you any kind of statement of changes in it, sorry, balance sheet, so it doesn't mean that there is no use of this equipment at cost. You will need this information when you are going to calculate the depreciation in the income statement. So that is why you will need this thing. So this is the reason why the examiner have given you this information here in trial balance. Provision for the depreciation of equipment, trade receivables. This is our asset. Provision for recoverable debts, which is 295. Bank is 162. It means that we have $162 in our bank right now. Trade payables are 11,585. Ordinary share capital, like this capital we have this time in our business. This is the share capital which we have raised from the selling the ordinary shares to the ordinary shareholders. After that, we have some general reserves and retained earnings. So retained earnings, basically the previous retained earnings, previous year's retained earnings, basically. Dividend paid on ordinary shares, like this dividend we have paid on this ordinary shares. Okay. This is share capital. It is not ordinary number of ordinary shares. This is just a share capital. Okay. So we have some additional information. I just solved this question. So just we can, you know, I don't want to waste your time. So that is why I just solved this question earlier. So this is our additional information. So inventory at 30 November 2021 was valued at this. So this is our closing inventory. Because this is the inventory we have find at the end of the year. So this is our closing inventory. And the depreciation, the rate of depreciation is 25%. And the company uses the method of depreciation, which is reducing balance method. Accrued operating expenses, that is, remember this, like accrued expenses, it means that it is our liability. So it will come into the current liability when we are going to calculate the asset rest ratio. Rent includes the payments of 2250 for the 3 months from 1st October 2021 to 31st December 2021. Okay, so like we have an amount above, like this is the amount of rent, and rates, 12,460. And the examiner says that rent includes a payment of 2250. Okay, like 2250 included in this payment. Okay. For the 3 months from 1st October 2021 to 31st December 2021. Like, so it means that you paid some extra amount But if you see, and the extra amount you have paid is for 3 months. 1st October 2021 to 31st December 2021. October, November, and December. So you have paid extra amount for 3 months. Okay, but your year ended on 30 November 2021. Okay, so first of all, we have to know that basically what is the payment of 1 month. So that is why we will divide this amount, this 2250 to 3 into 3, 2250 divided onto 3. So we have 2250 divided by 3. So we have 750. So it means that for 1 month, the payment of rent and rates is 750. 1 month payment. Okay, so we paid this amount 2250 as an extra amount, as an advance amount, we can say, for 3 months. And our year ended 30 November 2021. Okay, so it means that if we pay this amount on October to December, so it means that October and November has been used, like we have used this amount. So it means that only 1 month payment has left, which is 750. Because you just pay 750, 750, 750, this amount for the October, this amount for the November, and this amount for the December. Okay, this is the extra advance payment you just pay to your landlord. 750, 750, and 750. Okay, so but your year ends on 30 November. It means that you complete your October, you completed your October, and you have completed your November also. So it means that 750 and 750 you just used because you have been living, or maybe you have been working or continuing your operations in the factory. So it means that 750 and 750 has been expired. Okay, so only 1 month payment is remaining. So that is why you can claim on this amount. So it is your current asset because you are not used it right now. So that is why 750 is your amount, which is your current asset. Okay. Okay, so first of all, our first section about the revenue. Cost of sales, in which opening inventory was 12,945 and purchases was 14,3750, and the closing inventory is 12,830. Okay, so we have to deduct, we have to add opening inventory and purchases, and after that we have to deduct the closing inventory from it. So after that we have our gross profit, because we know that revenue, or you can say that sales minus cost of sales, or you can say that cost of goods sold. You can use both, um, you can use both of these, like cost of sales and cost of goods sold, because the meaning of both statements are the same. So after that you have GP, which is your gross profit. Okay, so after that we have expenses, and we have to deduct this from the gross profit also. So we have a number of expenses here. So first of all, your rent and rates. Okay, so what he says, like what the examiner says in the question, that your rent and rates basically 12,460, but you have an extra amount 2250 in this amount. Okay, and this amount you paid as an advance. As an advance payment, it means that you didn't use this amount till now. Okay, so 2250 basically this is the amount for 3 months in which you just use 2 months payment. Okay, so after that only 1 month left, 1 month's payment left. So the 1 month payment which is left behind, so it will be your current asset because you can claim on that if you don't want to continue. Um, you can say that if you want to change your location, if you don't want to use the same factory which you have been using right now, you like since so long, so it means that you can claim on the 750, the remaining amount. You can say to your landlord that just pay back our 750 month because we don't want to continue or we don't want to continue our operations into your factory. So that is why just pay back a 750 amount and we want to just leave your factory and we want to start operation into maybe in any other place. Okay. So that is why the 750, this $750 um, should not, you can say that $750 should not be add into expenses because it is not our expenses. It is because basically our asset. So that is why we just need to minus 750 from 12460. So this would give you the same answer 1/3 multiplied sorry divided by the 2250. So it will give you 750. And after that you will minus 1245460. Uh, you will minus 750 from this amount. So after that this amount is purely your expense. Okay, it is not your current asset because you just deduct this current asset from this amount. Okay. So after that you have operating expenses. So just go to the notes again and you can see that there is a accrued expense, accrued operating expense. Accrued operating expense means that you may occur the expense, but you not paid yet. So that's why it is called your current liability also. But because it is related to this year, your financial year, which is 13 November 2021, so it should be charged to expenses for this year because maybe after some time, maybe after 1 month or maybe after 2 months, you have to pay this amount um, to your tenant or maybe operating expenses. So like the person who may be serving you, so you have to pay this 415 amount, but is this 415 amount related to this year? So you have to put these 415 amounts into current year's expenses. So that is why you will add 12920, which you have paid, but 415 you didn't have paid now. You didn't pay it right now, so that is why you will add 415 into 12920. So you have 13335 as an operating expense for this year. So after that you have wages. Wages also you know that it is your expense. Okay, so after that depreciation of equipment. So examiner says that this company have been using reducing balance method for depreciated equipments. Okay, so what we have to do uh, for reducing or for depreciating of our equipment if we are using RBN. So in RBN, what we have to do is in the very first year of the life of the asset, gave you an example that if the cost of your asset is 40,000 and accumulated depreciation, like this amount shows, like if accumulated depreciation 30,000, so this amount shows that till now how much of amount you maybe have depreciated from your asset. Okay, and after that you will minus cost minus secondary depreciation, and after that you will have net book value. So RVM always applied on the net book value. So that is why what you have to do if you want to calculate the expense or depreciation expense for this year, you will need to equipment, you will need to minus 7,500 from the 40,000. Okay, so after that you will have your net book value, and you will apply this rate, this RVM rate, which is 25% on the net book value. So similarly, I have done the same thing here. So you can see 40,000 minus 17,500. So after that, you will have your net book value, and you will apply 25% on the net book value. So after that, you have this depreciated amount for this year on this asset. Okay. Okay. So after that, you have provision for doubtful debts. Provision of doubtful debts. So you know that your trade receivable was 9,800, and this company charged 4% as provision of doubtful debts. So you have 392. Okay. So this is your provision for this year, 392. Okay. But in the previous year, what was your provision? Your provision was 295. So it means that provision for doubtful debt has increased this year. Previous year it was 392, and this year it is 295. I think yes, 295. So it means that it has increased by $97. So if it is increased, so you will have to put this amount in the expenses section. But fortunately, if it is not increased, so it means that it is the income for you, like it will come under the other income section. But unfortunately, this is increased for this year, so that is why I have to put this amount in the expense section. So after that, you will have to deduct expenses from the gross profit. So you have profit for the year, which is 4,588. Okay. So after that, we have B part, in which we have to make a sushi. So first of all, you can see that there, like we have column and rows here. So first of all, in details, you can see on 1st November 2020, which is our starting year, because ending year is 2021, 30 November. So 1st November would be our previous year. So we have balance for previous year. So what was the balance? Okay, so we have a balance for the previous year. Ordinary share capital was 20,000. General reserves was 30,000. 3,000. Retained earnings was 2037. And dividend paid on in ordinary shares was 1,600. Okay, so we just okay. So like just put that amount in the starting year. So ordinary share capital was 20,000, and general reserve was 3,000 for the starting of for the previous year, and retained earnings was 2037, and the total is 25,037. Okay, so what is the profit for the year, like we just calculated above in our income statement? So what was the profit? It is 4,588. Okay, so Basically, retained earnings are profit, but profit after tax. Okay, profit after tax or profit after interest. So this is our profit. So it means that if a company may be making any profit for this year, so it means that it will increase your retained earnings. So you have to add this profit for the year into retained earnings. Okay. So total means total equity. Total equity. So you know that if profit is increasing, so the owner's equity, or you can say the shareholder's equity, will also increase. So that is why we uh, add this 4588 amount into total equity. Okay. So after that, we have seen that there is one more information about the dividend. So in above trial balance, we have seen not in the trial balance, in the additional information, that dividend has been paid by the company, the limited company. Dividend has paid by the limited company, and you know that if dividend paid by a company, so it means that it will decrease your retained earnings. It will decrease your profit, and also it will decrease your total shareholders equity, because an amount as a dividend, you can say that going outside to the business. So that is why it will reduce your total equity, and also it will reduce your retained earnings. So we have to minus 1600 from retained earnings and from the total also. Okay, so there is an amount related to general reserve. We have seen a transaction related to general reserves, transfer to general reserves, to 1,000. Okay. So here you can see there's some amount from the retained earnings we just transferred to the general reserve, which was 1,000 at 30th November 2021. So it is basically for this year. So this is for this year. So that is why we are putting this amount into uh, general reserve for this year. For this year's statement of general equity, 13 November 2021. Okay. The transfer to general reserves was 1,000. So of course, general reserve would be high. So that is why we are adding this to the general reserves. And after that, because you are using this amount, like you are taking out this amount from your profit, so that is why it will decrease your profit. But there is no effect on total equity. Why? Because this amount is not going outside from outside. It is still in the business, but we just keep this amount aside because we just want to go with the uncertain situation in the future. So that is why this amount will not give any bad effect or any negative effect to the total equity of shareholders. Okay, so just total the ordinary share capital, general reserves, retained earnings, and total. So if you want to just you can say that test that if your answer is wrong or right, you should just need to add these amounts: ordinary share capital, general reserves, retained earnings. So it will give you total amount. If you will add this, and this, so it will give you same amount. Like rows and columns total would be same. Okay. This is the way that you can check that your source statement of general equity is right or wrong. Okay, so after that we have a C part in which we have to calculate the liquidity ratio for M Limited. Okay, so uh, I was telling you about this, that we have a formula for liquid assets ratio, which is current assets divided by current liabilities. So our current assets basically trade receivables. Like I just put this formula here. So trade receivable was 9,800. Okay. So we have to deduct 392 from this because 392 was our provision for doubtful debt for this year. So that is why we have to deduct from this because this is possibly you can trade receivable. Basically, 302 is our provision for doubtful debt, which is possibly or maybe 302 has potential to go bad debt, to go into bad debt. So that is why we have to deduct this 392 from 9800 because it is possible that we will not have 392 as our trade receivable in our business. Uh, it will bad. So that is why this debt will be bad. So 9800 minus 392 and this 750 was our current asset from the rent and rates, and 162 was balance at our bank in our bank. So that is why it is also our current asset. So these are our current assets values, and after that we have current liabilities. So 415 was our operating expenses, our accrued operating expenses, which was our current liability, and 11585 was our trade payables. So we just have to add both of these. So we have 10320 as our current assets and 12,000 as our current liabilities. So you just divide this and you have 0.86 into 1. 0.86 into 1. So it means that for every $1 responsibility, you have 0.86 cents to pay.